Do you know what is interest rates and its effect in financial industry with basic swaps? Please subscribe to our channel and hit the bell icon to be the first one to receive the notification of our latest videos. Hello and welcome to Bank Read, where millions of people around the world can learn and be aware of banking and finance. So let's get started. Interest rate. A charge per unit is the quantity of interest due per amount, as an amount of the quantity lent, deposited or borrowed. It's outlined because the proportion of associate in nursing quantity loaned that a loaner charges as interest to the recipient, ordinarily expressed as associate in nursing annual share. The entire interest on associate in nursing quantity lent or borrowed depends on the principal, the charge per unit, the combining frequency, and also the length of your time over that it's lent, deposited or borrowed. Therefore, it's the speed a bank or different loaner charges to borrow its cash, or the speed a bank pays its savers for keeping cash in an associate in nursing account. Interest rate targets are a significant tool of financial policy and are taken under consideration once managing variables like investment, inflation, and state. The central banks of nations have a tendency to scale back interest rates once they would like to extend investment and consumption within the country's economy. In developed economies, interest rate changes are created to stay inflation among a firing range for the health of economic activities or cap the charge per unit at the same time with economic process to safeguard economic momentum. Interest rate future. A charge per unit future could be a derivative with a basic instrument that pays interest. The contract could be a settlement between the client and marketer for the longer-term delivery of any fixed cost quality. The charge per unit derivative permits the client and marketer to lock within the worth of the fixed cost quality for a future date. 1. A charge per unit future could be a monetary byproduct that enables acquaintance to changes in interest rates. 2. Interest rate futures move in reverse to interest rates. 3. Investors will take risks on the direction of charge per unit with interest rate futures, instead use the contracts to hedge against changes in rates. 4. Most charges per unit futures that trade on Yank exchanges use US Treasury securities because of the underlying quality. Understanding interest rate futures. A charge per unit future are often supported underlying instruments like 1. T-bills within the case of Treasury bill futures listed on the CME or 2. Treasury bonds within the case of Treasury bond futures listed on the CME but could be a division of the CME. 3. Other merchandise like CDs, Treasury notes, associate in nursing. 4. Ginnie Mae securities also are on the market to trade as underlying assets of a charge per unit future. The price of associate in nursing charge per unit future moves reciprocally to the modification in interest rates. If interest rates go down, the value of the charge per unit future goes up and contrariwise. Charge per unit futures are used for speculation functions, hedging bond portfolios or interest rates. 1. Speculators will use charge per unit futures to game the direction of rate changes. 2. Hedgers may use them to mute the impact of associate in nursing unfavorable move in bond costs and rates. Swap. A swap could be a byproduct contract through that two parties exchange the money flows or liabilities from two totally different monetary instruments. Most swaps includes money flows established on a notional principal quantity like loan or bond, even if the instrument are often virtually something wherever the principal doesn't modification. Every income encompasses one leg of the swap and one income is mounted, whereas the opposite is variable and supported a benchmark charge per unit, floating currency charge per unit or index worth. Normally swaps doesn't listed in exchanges and furthermore retail investors not engaged in swaps. Rather, swaps are primarily between businesses or monetary establishments that are tailor-made to the wants of each parties. Types of swap. In associate in nursing charge per unit swap, the parties exchange money flows supported a notional principal quantity so as to hedge against charge per unit risk or to invest. Allow us to see the categories of swap enclosed below. 1. Commodity swaps involve the exchange of a floating trade goods worth, like the Brent crude oil cash price, for a collection worth over associate in nursing agreed upon amount. 2. Currency swaps includes the parties exchange interest and principal payments on debt denominated in several currencies. Here, the principal isn't a notional quantity, however associate in nursing changed alongside interest obligations. Currency swaps will occur between countries. 3. Debt equity swaps involves the exchange of debt for equity within the case of a publicly traded company, which suggests the bonds for stocks. It's the simplest way for firms to finance their debt or allocate their capital structure. Total cum swaps includes the entire cum from associate in nursing quality is changed for a hard and fast charge per unit. This provides the party paying the fixed rate exposure to the underlying quality or stock or associate in nursing index. 4. Credit default swap (CDS) consists of associate in nursing agreement by one party to pay the lost principal and interest of a loan to the CDS customer if a recipient defaults on a loan. Excessive leverage and poor risk management within the CDS market were a contribute explanation for the 2008 monetary crisis. Thanks for watching. We hope you learned something valuable today. Don't forget to like, share, and subscribe. Also, hit the bell icon to be the first one to get the notification of all the upcoming videos.